Hey folks, welcome to Stock Market the week ahead. Oh boy, we have a lot to cover. In this video, I'll analyze the Fed minutes, jobs data, weekly performance, and what to expect next week for the CPI, earnings, as well as the economic data. Let's jump right in. Welcome to Take It Easy Trading channel. In this video, I'll be doing the stock market the week ahead, and I'll also be doing a couple of other videos this weekend, stock ETF futures the week ahead, top stocks for the week ahead, and Bitcoin for the week ahead, along with some trading tips. Please subscribe, like, comment, and share if you like the content, and follow me on Twitter. We have the first week of 2023 in the books, and topics for this week: weekly performance, Fed minis, jobs data, market momentum, and economic calendar and earnings calendar for the next week. Let's look at the week's performance. We had an up and down week. On Friday, we had a huge rally. Dow Jones is up 1.5% for the week, and S&P 500 up 1.4%, whereas Nasdaq is up 1%, and the international index is up 0.9%. The yields went down slightly for the week, 0.3%, and the oil has been down week concerning China, 8.1%, and the bonds have been up 2.2%. Good start for the bonds for the year. It was a wide rally on Friday, so let's take a look at the heat map. Everything is pretty much green. Apple, Amazon, Tesla, Microsoft. The financials have been doing well this week, and consumer defensive stocks doing well. Energy went down slightly for the week. We'll look at it when we look at the sectors. Now this is for the whole week. Apple is pretty much unchanged. Microsoft is down 6.6% for the week, and Tesla is down 7% for the week, and the healthcare sector is also down. UNH is about 7%. Rest of them pretty much unchanged to little positive in the consumer services. Now let's look at the sectors. We had basic materials, the winner for the week, up about 4%, followed by consumer cyclical, financials up about 3%. We have earnings coming up next week from big banks. The communication services up 3%, and the energy, which was a big factor last year, is starting the year with 0.29% down, and the utilities are also down 0.18%. Now let's look at the yields. Yields are slightly down compared to last month, 4.71% for the 1-year treasury, 5-year treasury down about 0.04%. So even 30-year treasury and 15-year treasury are up slightly. Mortgage rates, they were 6.84% last week, down 6.7% for 30-year fixed, and 15-year fixed is slightly unchanged to 5.86% compared to last week. 1 month ago, it's up since 5.82%. Now let's look at the Fed minutes from this week. Fed minutes said no rate cuts in 2023. Participants generally observed that a restrictive policy stance would need to be maintained until the data is providing confidence that the inflation is sustainably downward path to 2%. And several participants commented that historical experience cautioned against prematurely loosening monetary policy. The minutes reflected those sentiments, noting that no FOMC members expect rate cuts in 2023 despite market pricing. Market is still pricing in some rate cuts in 2023, as I covered in my previous videos. So the traders expect the central bank to approve a quarter point increase in the next meeting, which will be in February 1st. But possibly some reduction they are pricing in, but it is not going to happen, as the Fed has been cautioning repeatedly about any loosening of the policy in 2023. So we had on Wednesday up from this report, and then the Fed President Neil Kashkari came and said he would see the funds rate rising to 5.4% and possibly higher if inflation doesn't trend down. So that's about another 0.25% to 50% increase, whereas Fed has already said they would see 5.1 as a terminal rate in 2023. Now is Fed thinking that they need to go even higher than 5.1 to 5.4%? And then on Friday, Atlanta Fed President Raphael Bostic, he came in and said the rate will be just above the range of 5%, as they had already signaled last month, and it will stay there well into 2024. That's again a change in the policy. They said up until 2023 they will keep the high rates, and in 2024 they may seek to reduce the rates, but now they are thinking well into 2024. That's a very stark contrast, as the market is expecting a policy rate which will go down in 2023, or at least a 0.25 to 0.50 rate cut by end of the year. So the traders and the market, they are not listening to what Fed has been saying. We just have to wait and see and get the disappointment again when February 1st rate hike comes. Now let's look at the jobs data from this week. Jobs data was very strong. We have 165 million people either in the jobs or looking for a job, and the non-farm payrolls, we added 223,000, so which equals to 4.5 million for the whole year of 2022, and in 2021 we had 6.7 million jobs added, so that is only second best to 2021 6.7, the 4.5 million jobs. So the jobs are very, very, very strong. And now the average hourly earnings growth, we saw is huge downtake to the average hourly earning. As this growth is slowing, perhaps it's signaling lower inflation ahead, as people will have lesser money, but mind you, it's still above 4%, and the market took the market to the moon. And I would say not so fast, as the Fed still want to see a lot more data confirming ease of price pressures before they stop the tightening. The US unemployment is the lowest since 2000s. It's at 3.5%. This chart shows that the job openings remain well above the number of job seekers. This chart shows that the labor force participation rate has improved recently from 61% to above 62%, and the temporary payrolls have started to decline. So in overall, the labor market conditions remain fairly tight. Underlying trends indicate that emerging shift in the hiring demand. It also signals that there will be some slack will emerge as we move through 2023. While the markets are baffling between the concerns of a potential recession, the Fed has been signaling until we see more data, they are not going to soften, and there will be no rate cuts in 2023. And some other FOMC members are saying well into 2024 we may still have the terminal rates. And we have some more important data coming up next week, and Jerome Powell himself will be speaking next week, so let's wait and see. Also, I posted this new video, 10 stocks that the institutional investors are unloading. Feel free to take a look at it. If you own any of them, take some decision whether you want to own them or hold them. Now let's look at the next week's data, momentum, economic calendars, and the earnings. Market momentum. This is from the Friday's close. It was a pretty good breadth. We had 86% of the stocks advancing in NYSE, whereas 13% of the stocks declining, and NASDAQ 71% advancing to 26% declining. And looking at the moving averages, it, they improved very, very well compared to last week. Last week we were 71%, now 75% are above 5-day moving average. The biggest improvement is in the 20-day moving average. Last week there were 38% of the stocks above 20-day moving average. This week, by the Friday's close, about 66% of the stocks are above the 20-day moving average. So the momentum is positive. It can support a short-term rally, but all depends on the data and Powell's talk next week. So similar thing in the new highs and the lows, a little bit positive breadth on both 5-day, 3-month, and 52-week new highs and lows. Now what's coming up next week? On Mondays, nothing significant, whereas on Tuesday, by 8 a.m. Eastern Time, we will have Fed Chair Powell speaking, and it'll be interesting to see about the strong job data as well as the Fed minutes and how well they keep the rates into 2023, what will be the expectations going forward in 2024, etc. And if last year is any of clue, we know what Jerome Powell will be saying next week. And again on Wednesday, we will have some mortgage information, and the key data comes on Thursday with core CPI coming up, and as well as the initial jobless claims to increase further from 204K to 220K, which will be a positive welcome. And then on Friday, we have another FOMC member speaking, and then we will get Michigan consumer expectations and the consumer sentiment. And consumer has been very strong all of 2022, and we looked at the jobs data. They are earning well, even though the wages growth has slowed down, but it's still well above 3%. So I would expect stronger consumer coming up in Friday's report. Let's look at the earnings. On Monday, we have the cannabis company Tilray. And on Tuesday, we have Bed Bath and Beyond, the meme stock. I think they were thinking of filing bankruptcy. And then we also have Albertsons. Wednesday, we will see KB Homes. And on Thursday, most importantly, the Taiwan Semiconductor will be interesting to see their report and any supply chain issues for the chip stocks. And then big banks earnings on Friday. That's all in this video. Thank you for watching. Please look out for my other videos for the week, and please subscribe and like if you like the content.